Yeah, guys, definitely check out the podcast. If this is your first time listening to us, we run the Crypto 101 podcast. You can check it out at crypto101podcast.com. You can follow us on Twitter at Crypto101pod. We put out at least 2 episodes a week. We usually have a third that we're going to be bringing back in February called the Weekly Fire. And you get to hear more conversations just like this.
And you guys might notice these right here, Bybit. Bybit is a good friend of ours, and Zhou is the next presenter, and he is the CEO and founder of Bybit, which is a crypto exchange, but mainly they offer derivatives on crypto products. So very interesting stuff. We have a very in-depth conversation about really what derivatives are, why they matter, how he engineers all sorts of cool stuff on his back end, and it's a really valuable interview. Bybit is actually going to do a giveaway of 5 sets of merchandise to people who sign up using our referral link, and they're offering $90 US dollar bonuses for new signups. So Pizza Mind is going to give the referral link in the chat, and they're going to be giving away boxing gloves and merchandise and all sorts of cool stuff. So if you guys like trading crypto and if you guys like free shit, then make sure you sign up for Bybit using our referral code, which is bybit.com/a/crypto101. Pizza Mind will throw that into the chat. And without further ado, Pizza Mind, why don't we bring on Ben from Bybit?
All right, everybody, we are back with another great guest here at the Crypto 2020 Summit. We are joined now by, I'm a personal fan of this exchange. This is Zhou, who's the CEO of Bybit. Ben, welcome to Crypto 2020 Summit.
Hello, thank you for having me on the show. Hello, everyone.
Absolutely. So Bybit's doing some really innovative work with some derivative products, and you guys have a great engine for your exchange. But before we get into the deep dive of your exchange, I want to talk to you a little bit about what you were doing prior to crypto, and what about crypto made you really want to get involved, and where do you think this market is going in the next 10 years?
Okay, yeah. My previous background, I ran a retail forex exchange for more than 7 years. And I was in charge of the overall management and mostly in client daily operations. How I got into crypto, it was really sort of started off. I got into crypto in early 2017 when a lot of friends around me sort of start to talk about it. And you know how before that we were in the sort of financial industry and everyone knew about Bitcoin, but it seemed to me quite far away. But in early 2017, it seems like a lot of these talented guys around me, especially, are starting talking about it and really get into it. So that's how I sort of got involved and got interested into crypto. And when I first got into it, I was quite mesmerized with the tech, and I believe is the future. One of the biggest reasons is because I'm in my 30s and we missed the sort of internet bloom. And we were sort of thinking, okay, what's the real big deal for our generation? And it seems to be either 5G, IoT, or blockchain tech. And for me, as a financial guy, I look at blockchain and crypto. I'm like, well, this is what I can do. And at the time, I looked into the exchange space. There was BitMax, there was OKEX only for derivative exchanges. With my prior knowledge, I figured maybe we could make a difference here in crypto. And that's how I got into it, and I started the exchange. And lastly, about the future or 10 years down the road, of course, now we devoted my life into this whole industry and built this exchange. We are definitely betting on the mass adoption of crypto. So we're very, long-term optimistic about crypto and blockchain in general.
Yeah, there's so much to be excited about. But there has to be stepping stones, and we have to walk before we can fly. What are some ways that you think the crypto industry needs to evolve before it can break that magical $1 trillion global market cap?
Yeah, that's a very good question. I think a lot of people has been asking, and most people focus on saying maybe a new tech or maybe a more concrete tech that would really bring mass adoption of crypto into the whole space. For me, as exchange, we want to focus going back. Basically, right now, for any institution or major players, the biggest problem of stepping into crypto, one is regulation, of course. Second is simply the tech and the liquidity. We want to make sure that our exchange can actually be able to offer the tech and bring back and bridge the gap between the old traditional guys and into crypto, such as offering fixed APIs, making sure the liquidity is very good, so we can go back and present to the older guys and say, hey, the product is ready, the tech is ready, is up to date. You guys can check it out. It's a simple plug-in, and you can just try it out. Yeah.
What are your predictions for exchanges in 2020? Will we see hundreds more pop up, or do you think we'll see hundreds go out of business due to nobody using them and the lack of that liquidity?
I don't think the space needs a lot a bunch of new exchanges, because the idea is, even if you look at the traditional industry, exchanges, their only job is to match orders. And normally for client acquisition, you have different players. You have the brokers, and then for liquidity, you have the liquidity providers, and even the tech, the bridge service and all that. So because of crypto, the whole industry is so small. Exchange is basically doing everything. We have to do client acquisition, we have to do a lot of marketing, we have to do liquidity seeking, we have to do a lot of these type of things. I think in the future, as mass adoption comes in, number one, no exchange is able to match all these orders. So what's going to happen is, I think, all the exchange will raise their limit on the order amount, and basically leave the smaller guys for the brokers to take care of. Yeah, and I think that might be the space. So the brokers model might sort of, start to emerge in 2020. I think.
I think that's spot on. And I know there's guys like Invest Voyager and eToro who are
Yeah.
brokerage platforms that are really easy for the retail guy to use, that you could buy just $25 worth of crypto easily. And they source bids and asks from all the different exchanges. But that's definitely a trend I see unfolding. Raise the limits on the exchanges. Keep it kind of for, I mean, for the heavier traders who want to trade thousands or, hundreds of thousands of dollars, sometimes millions of dollars worth of crypto. And not clog up the engine on your guys' end.
Right.
So that's
Yeah,
really
and
cool.
yeah. So if you look at even the Nasdaq, all these big exchange, it's not because their tag is extremely good. It's simply because they only execute the bulk orders and they match the back bulk orders. For us or any other players in the crypto industry now, we match $1 with, I don't know, 100 million. As long as you're older, we can match
Right.
them. But obviously, when the mass adoption happens, and so many people comes in, we have to raise the limits simply due to limitations, simply of the tech.
Yeah, and also, I mean, think about it from a scale perspective. I remember in the November of 2017, Coinbase just didn't work. There were too many little guys market buying, and then there's all the support, and it takes such a toll on the business as a whole having so many customers. So, that would be a shame for Bybit to go down or have, flooded with support tickets. Poloniex was doing the same stuff where you have guys that are, to your business, they're just worth, maybe $100, but they're just a same customer, and their support tickets is just, it doesn't scale very well. So I think that's an awesome trend that actually nobody that we've had on the show yet has really talked about. So
Yeah, and the broker model, actually, because they would combine all the order book from all the exchanges, so it would show you the bid and ask. Let's say maybe this at this moment the bid from BitMax and ask from Bybit, or the next moment might be from OKEX. So in the end, consumer
yeah,
actually gets the best execution, if that's
yeah,
that's
100%. So let's
yeah.
talk. I mean, let's talk a little bit about the financialization of Bitcoin mainly. For instance, we have the CME futures that launched a few years ago, but now we're actually getting on January 13th, pending some U.S. regulatory approvals. But it's
Yeah.
still set. We're going to have options on Bitcoin futures on the CME. So at a
Yeah.
high level, do you think that the financialization of a product that, like Bitcoin, that was originally intended to bank the unbanked and to serve, and to serve those that don't have bank accounts and all these, very idealistic things, and now you have Wall Street and London coming in and saying, hey, we're gonna make this new asset our you know our own, essentially. What do you think of this whole trend? Excuse
Yeah.
the what do you think of this?
I think it's very crucial for any product or any, especially like Bitcoin, to have a more financial institution playing around with it. Simply because the more liquidity is what's determined the actual price of Bitcoin. If there's no financial products around this, it means the market is basically immature. So you need all these different players, options, futures and all that to really play a major part in the price determination of the actual Bitcoin value. So I think it's very important and very crucial to have that, and only because of that you can start to see there are many different ways to people and retail clients to not only profit but buy different financial product around Bitcoin and actually be able to use it, utilize the Bitcoin features. So I think it's definitely healthy to have different players in the market. It means it's becoming more mature. Yeah.
Speaking of futures, you guys offer something on Bybit called a perpetual contract. Can you explain the difference to our listeners, the difference between a perpetual contract and a futures contract?
Okay. The perpetual contract, as the meaning, it's never expires. So as regularly, normally we have the regular futures is either a quarter, half year, or 1 year. When you expire, it settles. Either you have the cash settlement or you have the physical settlement. But for perpetual, as the name says, we never settle. We use a funding mechanism to make sure that the price is always anchored with the underlying spot price, so that basically for a lot of the retail clients, when you buy Bitcoin, we still have the mentality of hodling. Once if you are in long, you don't want to sell short. So this gives you the opportunity to really hold your position for as long as you like, as long as you can afford the minimal funding fees and all that.
Okay, that makes a lot of sense.
Yeah.
What else would you say really makes the Bybit exchange special? So you have the perpetual futures or the perpetual swaps. That makes you guys special. What's one other thing? And maybe you could also dovetail into your roadmap for 2020.
Yeah, for what we are really good at is doing the fundamental job of any exchange. When we first started, we find clients simply need an exchange that works during volatility, no overload, no server downtime. So all of that, it's really provide the best trading execution and trading environment, customer support and all that. So we're really retail focused. Um, for our this year's roadmap, we are going to offer a linear contract. Currently, it's what we have is called inverse, meaning that all the contracts are settled in their native token. The linear contract will be settled completely in USDT, a stable coin. And after that, we will be releasing expiration regular futures, half a year, quarterly, all that. And we are also looking into the option market, but we don't want to simply offer a regular option product because we believe it's a bit difficult for retail to understand, to grasp the idea. So we are really trying to innovate a new sort of option product that would make retail clients easier to understand and really how to use it as an insurance ticket and all that.
What might a Bitcoin options market even look like? What would be people be playing? What might people be placing puts and calls on?
It's first of all, option for Bitcoin has been around for already 1 or 2 years. I mean, Deribit was the first one offering it. But you can see from the volume, it's really for the professionals, especially institutions and different fund managers. For retails, again, it's hard to understand with all these different concepts of option. So I think it really needs a way to make it more simple, so that the daily retail clients can use it uh, as a different way to to trade, and also place a long-term insurance, let's say, on your if you can combine your actual perpetual contract with a option to minimize your risk, and also for miners and all that, the option is the perfect tool. But we've been talking to many miners, and they don't get a concept. So that's why they're not using it.
I'm really actually intrigued about the miners. I mean, they are the number one source of sell pressure. Is that a fair answer?
Actually, I don't think they sell. We talked to many of them. I was talking to the founder of, I don't know if you know, it's a Chinese project called Renminbit.
I have not heard.
They do a loaning and lending service, and basically you can use your BTC as a collateral to get USDT or even fiat, and they currently reserves quite a lot of BTC from the miners, simply because they believe in the long-term value of BTC, and that's why they're in the business. But they have the need to cash out and get some liquidity to buy new machines, let's say. So what they do
Right.
is they uh, they uh, they use their BTC as collateral to get more USDT, but they don't want to miss out on the ride on the BTC. So I don't think they are bearish on the market. They are almost very bullish on the long term of Bitcoin.
Right. I definitely agree. Like, they're investing in illiquid assets in order to support the long-term growth of the market. So I don't mean it to say that, miners are bearish by any means, but I definitely
Yeah.
feel like, they have, net operating expenses where,
Mm.
their revenue comes in the form of BTC, which is denominated in some sort of fiat currency that they'll be forced to liquidate in order to cover their expenses. But I guess
Yeah.
what you're saying is that they will not necessarily sell it, but they'll lend it out, which is something interesting that I hadn't really given much thought to.
Yeah, yeah. No, they actually use their BTC as collateral to be able to lend USDT or fiat to cover the expenses, but they would still try to get their Bitcoin back
Yeah.
once the price is back and all that. Yeah.
Do you think, kind of at this point, I think we should talk about the halving. I think that would make most sense right now because a lot of people are saying, oh, it's priced in, it's not priced in, all that kind of stuff. But, what is your take? Do you think that the halving is going to have a significant impact on the price of Bitcoin, or do you think it's kind of a moot point?
I think it's already been absorbed, I guess. Whenever there is such a sort of expected event, the market impact has been long absorbed. So, to be honest, I believe this year is going to be, if we talk about price predictions, I talked to many guys in the industry. Most of them are telling me that they believe the market is going to be slowly recovering, but not doing too much crazy things in 2020. This is the general mood and the feedback, but everyone's thinking slowly, going up, but I haven't seen anyone telling me that they believe because having price is gonna go back to 20,000 or whatever immediately. So I think this probably is gonna what's gonna happen.
Yeah, you're right. That is the general consensus. And it makes me feel good. If we all think something's going to happen, this many people can't be wrong.
Yeah.
What are some tips for retailers or beginners as far as using leverage goes? Can you give us just some words of wisdom?
Yeah, leverage trading is obviously very risky. We actually put on many risk warnings on our website. Um, really know what you're doing and always have a strategy. We find a lot of retailers don't have a strategy. They simply don't even use stop loss. So always use a stop loss. Always, trade with the money you can afford to lose. Don't gamble, because gamble you always lose.
That's great. And kind of just to wrap us up here, I want to kind of veer away from crypto. However, I think this is intertwined very much with crypto. And it's the situation going on in Hong Kong, and it's the situation going on with the RMB peg. And it seems like there's a lot of volatility that is correlated between the RMB USD trading pair and the price of Bitcoin. So what do you see unfolding in there?
Um, to be honest, the Hong Kong dollar and the Chinese RMB has always been sort of anchored with the US dollar. So whenever US dollar moves, the Hong Kong dollar moves, and then the Chinese RMB moves. So, but definitely there is a huge impact because I am Chinese, and a huge impact of the trade war actually going on with China and the US. I never thought it would impact people around me, and I actually have people, friends and stuff saying that, well, their company is not doing so well because of this and that. So I start to see that, and I'm not too sure about the Bitcoin price and how is it correlated with RMB and Hong Kong dollar. To be honest, I haven't really thought about that area yet.
So is the trade war essentially making it harder for, Chinese companies to raise capital?
Um, Not in a risk capital way. I mean, mostly I talk to our export and import companies, and also especially people in the tech industry, and they're saying a lot of the patterns, a lot of their new their tech that or the parts that they were able to get before, now they cannot even get it, even if they work in a, let's say, a European company who indirectly got a US pattern or whatever, and now it's completely unavailable to the Chinese companies. So I guess in this way, they have to find replacement. They are trying to source it from Japan and all these other places. I mean, at least they were saying is making their life difficult. Yeah.
I see. Well, we wish all of our friends in China the best, and we hope this trade war nonsense goes away quickly. Um, as soon as we start using more supply chain and crypto and stuff, maybe we can get around these silly things.
Yeah.
In any case, we got one last question for you. We wanted just to try to get your sentiment on what makes a market healthy versus unhealthy. When you list something on Bybit, what are some of the criteria that you look at before you give it the thumbs up?
For us, the only judgment is literally the liquidity. We currently only have 4 different pairs: Bitcoin, Ethereum, XRP, and EOS. For any other pairs to be listed, it's not a tech issue. For us, it takes a week to list any new coin. But it's more for can we find the good market makers? Is there volatility? Is there enough players in that coin? And to be honest, even with our current 4 product, 90% of volume goes to Bitcoin. So it seems like, at least for trading wise, Bitcoin is the only thing that sort of make real sense. And so for us, I think liquidity is number one. And to answer your question, what makes a market healthy? Especially in the crypto, right now we're in a very unregulated space. I think competition will make a lot of things healthy. We've seen many different exchanges popping up, but ultimately consumers or traders are getting the benefits because only competitions would make exchange compete and trying to win the customers, offer the best product, offer the best execution and customer support, all because of competition. So I think that's the only thing, and the real thing that will make a lot of things, the whole market more healthy.
Much agreed. That's awesome insight, Ben. We really appreciate your spending 30 minutes with us this morning. We can't wait to keep tabs on Bybit.
Thank you. Thank you.
Have a great rest of your day.
Thank you. Bye-bye.
And just to continue that thought of what makes a market healthy, from an exchange perspective, it's all about liquidity, like Ben said. But from an investor perspective, you also have to think about liquidity in the sense of, eventually I'm going to need a buyer for this bag that I'm holding. And if it's a bear market, or you find a coin that is brand new and off the radar that's worth, pennies on what you believe is going to be dollars or hundreds of dollars someday, either you need to be willing to wait that number of years for that to happen, or you just get so excited, you just keep buying, like, oh my god, this is such a great deal, I'm going to be a millionaire someday. But you have to have a seller at the end of it. And if you don't have liquidity in that market, and the people that are running that project aren't taking care of their markets, and they don't have good exchanges, and they're not working with market makers, those are huge red flags that they're never going to live up to their potential, because crypto is not based off of things like stocks, where you have earnings reports and valuations of a company. It's just pure speculation. So keep in mind it's very much a double-edged sword, and that's why you really have to manage your risk. And even when you find a diamond in the rough, you can't throw your whole bag into it. Maybe just a small percentage. So if it does, go 100x or 1,000x, you get paid off real well, but it definitely can't end up being a big part of your portfolio. But as it grows, you also need to take your profits and eventually get out of that illiquid market. If in 5 years it's a wonderful thing and you can find it on 100 different exchanges, great. You were the first one to know about it. But by that time, you've already taken a ton of profit and bought yourself a new house. So definitely don't hold on forever. Take your profits where you can and manage your risk. Bryce, what are your thoughts on that regard?
Yeah, I think you definitely covered that part perfectly. I kind of wanted to backtrack a little bit to what he was saying about miners not necessarily being the main sellers of Bitcoin, which is something that kind of struck me. And I don't know if I completely agree with it, considering miners are, the first people to touch Bitcoin, and they are the first people to, have more or less operating expenses that they need to cover. But he did make an interesting counterpoint and said that basically miners aren't outright selling crypto on the market. What they're doing is they're finding borrowers of Bitcoin and they're lending it to them. And when they're lending their Bitcoin, they're getting cash in return. So they could use that to pay off their debts and their operating expenses, their salaries, all that kind of stuff. And then slowly over time, they'll take their Bitcoin back and pay off those loans essentially. I thought that was kind of an interesting thing that I haven't really heard much talk about. And then he was also saying that he thinks that the Bitcoin halving is already priced in, that it's not going to have any effect on the market. That's another very contentious point that he makes, and it's one of those things where how could something that hasn't happened and a lot of people aren't even in the market, how could that already be priced in? I mean, there's not even all the market participants that are going to be in the market right now. There's going to be the point I'm trying to make is there's going to be so many new people coming into the industry buying Bitcoin that are price insensitive. They don't really know a good price from a bad price. And sometimes they don't even care getting a good price versus a bad price. And so for them, they're just going to indiscriminately be buying. And I don't think you could really price that in per se. So all intents and purposes, really, really, really loved getting to meet Ben. I love they've got a really clean platform, and they're doing a lot of really innovative work. So that's Bybit. Make sure that you guys go and if you guys are in a agreeable jurisdiction for their terms and services, click our link. You guys will get some free money. You'll be entered for a chance to win some of these bad boys.